JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 14th of January 2022. As always guys, welcome everyone. Welcome to this, of course, Friday session, the last session for this week. Also, just to kind of let you know, next week, because again, I'll have to run the videos from not my usual location, so I will try to do those live, but if I'm not successful, then I'll have to do the recordings for next week again. But again, like I said, I'll check that out, but hopefully everything can run smoothly. But either way guys, before we get along with our today's session, let's quickly have a read through our risk disclaimers. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then guys, before we jump into the charts as well, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So check us out here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, the first one on the pick up here is Nikkei 225. Just a quick update. We closed the week here in negative territory, and most importantly, we broke the lower side of this triangle, but we managed to stay above it, so that's a slight good sign here, I would say. But of course, it's making us worry that further declines could be possible going into next week. Of course, the markets turned bearish yesterday after the Fed came out saying that they might lift rates a little bit earlier in March, and that of course did not work well with the equity world. So long story short, for now, again, like I said, let's see how today's session is going to go through, the European and the US one. Then we'll see how the Nikkei cash index reacts to all this. So for now, yes, we're keeping a close eye on this, but it's, like I said, it's becoming very interesting, especially probably for the sellers. But again, it's too early to talk about that yet. Shanghai Composite, now this one's a little bit more reassuring, and boom, there we go. So although I kept on talking that this could be a possible falling wedge pattern, but what I was also saying you the whole week, that wait for that confirmation breakthrough the upper side if it is a falling wedge. Well, so far, I mean, you can see that the opposite is happening. So we've managed to break the upside line and fall below the 200-day EMA. So this is the other scenario that I was talking about, that if we eventually fall below this area, this could lead to some lower levels. For now, everything's looking quite bearish, I would say, and I will be leaning a little bit more towards the downside if the index continues to trade below this upside line, and below the 200-day EMA, of course, because what I don't want to see here is basically something like this that we had. Let me just quickly grab this. So something like this here, like we had here. Let me just grab this one a little bit. There we go. So and something like here as well. So basically, when we had those nice drops below the 200-day EMA, and then eventually it kind of reversed and pushed back to the upside. So again, yes, we are leaning a little bit more towards the downside on this one because we are below the upside line and below the 200-day EMA. But again, let's be very careful because after, let's say, it could trade for a few days below that 200-day EMA, but if it suddenly reverses again and pushes higher, then, well, I mean, basically we could see a nice repetition of the same scenario as we had here. So long story short, the only option right now is to kind of wait. I'm leaning, like I said, I'm leaning a little bit more towards the downside as long as it stays below the 200-day EMA. If it starts climbing above it, then well, I mean, maybe I should kind of well, I should kind of reconsider everything and maybe aim higher, but then some of the levels would have to be redrawn again. Now jumping into DAX, the German index. So yeah, this one ended the day yesterday in positive territory. But of course the cash index did decline as well, together with the US equities. And well, I mean, looking at the cash index right now, we're seeing that the price is trading at around 15,937. So it didn't really drop drastically, but managed to kind of I wouldn't say actually fell back below this hurdle. There we go, this 15,955 level, the one that I kept on talking about. So okay, now that's going to become quite interesting because this could lead to some slightly lower levels. I mean, we could initially, if it continues to trade below that 15,955 zone, I will aim for this 21-day EMA initially. I'm not going to drag this one way too much to the downside. I'm just going to aim for this little hurdle near the 15,880 zone, which is also around that 21-day EMA, not far from there. And then I'll take it from there. Now, Nasdaq. No, okay. So, Nasdaq. One of the biggest, biggest loser among the top three yesterday. So, yeah, I mean, it lost around 2.5% roughly, and yep, of course, as you understand, technology was the biggest loser yesterday. So the biggest losers yesterday were technology, consumer cyclicals, and communication services. The two sectors that managed to remain in positive territory were utilities and consumer defensive, both kind of staying at around 0.31%. So yeah, at the moment I would say be very careful. Of course, we had quite a steep decline here. I mean, going from the almost 16,000 to all the way here towards the 15,500, and wow, I mean, that's quite if you manage to capture that one, I mean, congratulations, guys. I mean, these things do kind of help out in life, and especially in your confidence. But of course, as we know, confidence might be your enemy in trading as well. So you know, everything has to be in moderation. For now, long story short, guys, I mean, looking at the cash index, we're seeing that the price did rebound a little bit here. A few lines need to be adjusted now. Let me just recycle some of these lines and yep, mark some of these ones. We have pushed below that 100-day EMA and fell back below the 15,627-28 zone. If we continue to trade somewhere below this area, then, well, I mean, maybe another slide could be possible. We could maybe aim for that, for this area here, this 15,357. I'm not saying that this is the perfect support zone, but somehow it previously did act as a good area of resistance, then support again here recently, and now let's see, it could get overtaken, of course, don't get me wrong, it could overshoot here, but if by the end of the day it still climbs back and stays above this area, now that's of course just kind of points out the fact that it's quite an important level to watch, or should I say area to watch. So long story short, for now, guys, yes, we are seeing a bit of a retracement here on the cash index. Can we get a little bit of a higher retracement? Well, let's wait and see. But if we do, if we stay below the 100-day EMA somewhere, then yes, and maybe another slide could be possible. Now jumping into the DXY dollar index, so we broke the upside line, we stayed below it, and there we go, boom, we continue to move south. So I need to adjust a few levels here. I think this is what I need to draw here. This is the high of the 5th of November near the 94.62 zone. As you can see, today we managed to reach that area almost, but just fell shy by a few points. But yep, everything is looking quite promising here. And in a way, for the sellers, I would say, as long as we stay below the 100-day EMA, I'll continue aiming for that 200-day EMA. Quick update on gold, and yep, everything's also looking quite positive. So although yesterday we had a bit of a tease here, we saw a drop below the below this downside line again. It quickly pushed back up and stayed above it, and now we're seeing a nice good climb higher. However, in order to get a little bit, although all this is looking quite positive, of course, yes, although to get a little bit more comfortable with the upside, I would prefer to see a push above the 1831 zone, and then yes, a nice good pop above that level would confirm a forthcoming higher high, and potentially more buyers could join in, and then we could aim for that upper side of the triangle here, and then we will take it from there, of course. But for now, yes, it's very tempting, don't get me wrong, but I'm always very careful with Fridays, because Fridays tend to be, Fridays tend to be a little bit more tricky. It's the end of the week, and yeah, sometimes irrationality can come in, and that's what I'm saying. Be very careful, guys. Sometimes we can just get those one-way traffics, and if you're a trader who likes to, let's say, scalp on reversals, on potential reversals, sometimes you might not get that. So just like I said, it's somehow Friday kind of carries this torch. So basically, I mean, you've understood the situation here. I mean, it's quite straightforward. Yes, we are leaning a little bit more towards the upside on this one, but I would prefer to get that confirmation break first. So yeah, although I know that maybe for you, if you're keeping your position very small and kind of and short, and for a short period of time, then yes, maybe this little difference here is quite significant for you. What you can do here is, of course, you can mark the current highest point of this week near the 1828 zone, but yeah, and a nice good pop above it, of course, may attract a few more buyers, but just to be, like I said, be very careful. This is the barrier that I'm keeping an eye on. So yeah, let's see how this is going to play out. WTI oil. So of course, beautiful formation here. I mean, I do like these scenarios here. I mean, we managed to get that perfect test of that downside line. I mean, I'm quite happy with this. It worked out nicely. I talked about this from the beginning of this week, and yeah, there we go. We managed to reach that. We managed to get a hold up there. Now we're getting a bit of a squeeze here. So because we're also stuck above this upside line, we're stuck below the downside line and this upside line. So this upside line is taken from the low of the 20th of December, and the downside line is taken from the high of the 25th of October. So pretty straightforward. We need to see a clear breakout through one of those lines before, let's say, considering the next short-term directional move. For the upside, I would like to see also a push above this barrier, the 83.07. That's the current highest point of January, and as we pop above it, yep, would confirm a forthcoming higher high. For the downside, I need to see a drop below the 80.45. So a break of this upside line is not really enough for me. Litecoin. So there is some positivity in the crypto world, and especially in Dogecoin. I'll get to that in a bit. But the other cryptos right now are a little bit on the modest side. Yes, they're gaining a little bit, but the Litecoin here, for example, from the technical side, is really showing something interesting. I mean, I do like these little kind of scenarios like this, because for me, this looks quite bullish. However, it comes in line perfectly with my idea of waiting for that pop first. So just to be a little bit more on the safe side. So a pop above the of yesterday's high near the 142.34 level. Yep, might do the trick for more buyers. The crypto, yes, of course, would also jump above the 21-day EMA, and this, yes, could look a little bit more positive in the near term, at least. For now, I'm just waiting, because, don't get me wrong, it might end up just moving sideways here for now, and then, yeah, it does like to move sideways recently, so yeah, we'll have to wait on this one a little bit. So, long story short, for now, I would like to see that pop above this barrier, and in order to go for some higher levels. For now, I'm just waiting, and of course, Dogecoin. So Dogecoin is just on fire today. I mean, yep. Thank you very much, Mr. Elon Musk, on this one. So yep, it seems that Tesla is reviewing. I think that how was the report? How did the report sound? I think that they're reviewing the option to as a payment method. So yeah. Let's see where that's gonna go. But yep, quite interesting, and quite interesting for Dogecoin buyers. I mean, let's see. Like I said, we managed to reach, from the technical side, we managed to reach this target, the 100-day EMA, the 200-day EMA. In general, I mean, on the bigger picture, this is what we have right now. It seems like, yes, we managed to break this long-term, or actually more of a medium-term downside resistance line taken from the high of the 8th of May of 2021. So that's a good sign. Now we're just getting a little hold up near this 200-day EMA. If we clear that, well, I mean, this could end up traveling further north, guys, and this is where it's going to be quite interesting to see if it actually does that. Now, AUD USD. So, still positive. I talked about this one yesterday. Still positive. We're still hanging around that 100-day EMA. So, to be honest, I mean, not much excitement here for now. The only little excitement is that we are still holding above this 0.7277 level marked by the high of the 3rd of January. Yeah, so this kind of keeps that positivity still in play here. Now, if you're looking for some upside, then of course continue monitoring this hurdle. If we stay above it, then yes, I'll aim for this 200-day EMA initially, and this downside line then, which is drawn from the high of the 25th of February for the downside. Now, if we fall below the 0.72 and 77 level and stay below it, yes, we could go for a bit of a downside here, but I'll be very careful because this might be seen as a temporary correction before another possible leg of buying. So yeah, let's see how that's going to play out. For now, yes. Even if it, let's say, drops even further south here, I mean, still this could be classed as a temporary correction before another possible leg of buying. USD CAD very quickly on this one. So yeah, we're testing again this hurdle, so everything is kind of working out nicely. If we drop and stay below that 1.2493 zone, then yes, I'll continue aiming lower. So let's keep an eye on that one. For the upside, well, this is where the tricky bit comes in, because would prefer maybe to see a push above the current highest point of today near the 1.2525 zone in order to, let's say, consider maybe a bit of a corrective move higher. So at the moment, that's the kind of situation. It's not ideal, of course, but yeah, let's see how this is going to play out. For now, I'm leaning a little bit more towards the downside, unless, like I said, it starts popping back above that 1.2525 zone. USD JPY, so drifted nicely to the downside. Yen buying increased yesterday for obvious reasons, of course. Investors started jumping into something a little bit more of a of a safe haven-ish, or how can I say it, safe haven-y. Yeah, there we go. A little bit more safe haven-y. So yeah, they've managed to jump into JPY, and of course the weaker dollar is not really helping out here. And this combination kind of led to this this pair breaking the upside line here, and now we're drifting lower. So basically, I would say as long as it stays below this upside line, or even this downside resistance line taken from the high of the 6th of January, then yes, we'll continue aiming lower. But this move lower could be classed as a temporary correction, because overall, in the bigger picture, you can see that we are still on a nice uptrend. GBP USD. So okay, yesterday I talked about this area right here in between the 1.37 and 1.3710 levels. We are continuing to trade above it. However, it seems like we're running out of power and momentum. So we're struggling to go for that higher high. Of course, let's be very careful here. If by any chance it starts reversing back below this area, back below the 1.37 territory and stays below it, we could maybe consider a bit of a retracement, a bit of a corrective move lower. Euro NZD. Now, this is something that I haven't looked for quite a while, guys. I mean, haven't picked up on this one, but it's quite interesting. And if you know your technical analysis, I mean, this looks very, very nice, especially on a daily chart. I mean, of course, it looks like a nice bullish flag here. Maybe not an ideal one, but nevertheless a nice bullish flag. So again, and we're also above all of the EMAs. You can see the 21-day EMA crossed the 101, and the it's now approaching the 200-day EMA. So in a way, what could happen here is, for example, this is just an idea, of course. It could kind of let's say bounce around here for a little bit. So maybe it could drop to the downside, maybe trade somewhere around here, and then kind of maybe, you know, once it takes out more buyers, and then yep, it could reverse and push to the upside. So be very careful if you're looking for a little bit more something cautious on this one. Well, of course, keep your eyes on the highest point, the current highest point of January, near the 1.68 level, and on the highest point of December, which is around here, near the 1.6829 zone. So this whole area is the one to watch. If we clear that, then we'll slowly start aiming higher. We'll aim for the highest point of September, or actually, is it the highest point? Yeah, that's the highest point of September, and so on, guys. I mean, we do have the highest point of August here as well, so a bunch of nice obstacles. But for now, if it falls below this upside line and starts falling somewhere below this territory right here, actually right here probably will be easier, the 1.6529 zone, then, well, I mean, this is where maybe we could see a bit of a retracement back down. And finally, Euro USD. Euro USD continues to drift north, and yeah, we managed to reach the 100-day EMA. That's perfect. So far, this EMA is providing good resistance. In order to go for some higher levels, we need to clear break above it. So pretty straightforward. I'm not going to really invent a bicycle here, but yeah, it's just, like I said, it's just the way it is. I mean, if it stays somewhere around here, I'm going to take a bit of a careful approach, neutral approach. For me, let's say to consider maybe the downside again, I would like to see a drop somewhere maybe below this hurdle again, and then yes, we could consider maybe a move to the downside here. But at the moment, yes, let's keep an eye on this. I mean, we're leaning a little bit more towards the upside, especially if DXY continues to slide. Then yes, this pair might continue drifting north. So keep that in mind. Okay, guys, yeah, be very careful today. Of course, have a wonderful trading day as well. Yes, have your stop losses in place. And yeah, everything will be fine in that case. And I hope, like I said, I hope you go into the weekend for a good relaxation, and then you come back on Monday relaxed and happy, and yeah, and I wish you all that, guys. So thank you very much for watching and listening. I really appreciate your views, your likes, guys. I really do. So yeah, thank you, a massive thank you for that. So thank you very much, and bye bye.